Hey there, as the saying goes, the trend is your friend. But how do you know when the trend has come to an end? In this video, I'll give you proven methods to figure out when a trend could possibly be coming to an end. And I'll also show you what I like to use. Remember that there are no guarantees in trading, and nobody really knows exactly when a trend will come to an end. But there are proven ways where you can put the odds in your favor. Alright, one thing I look for is a parabolic move. Does the price go straight up or straight down? And obviously a move like that is not sustainable. So at that point, I'm looking for a reversal where traders take profit and price does not continue the move. So for example, let's take a look at Litecoin. So Litecoin had this huge move up, consolidated, and then it shot up and then came back down. So this is particularly useful in the cryptocurrency markets because there is a lot of pump and dump. It happened here again, and you can see the pump and then it dropped again. So what you can do here is start taking profits when you see price spike up like that. Now, obviously you're gonna have to backtest this. You're gonna have to see what constitutes a parabolic move in your market, right? It could be different in futures, it could be different in crypto, it can be different in stocks. All right, here's another example, Euro CAD. So you have a really strong move down here. This is obviously not a sustainable trend, so eventually it's going to turn around, and then you get a similar thing where it consolidates, makes one last gasp at it, and then it starts to come back. And here's one last example on parabolic moves. You've got this stock Cryomass. It's a penny stock, and as you can see, it's similar to cryptos, right? You get this huge pump and it comes back, huge pump and then it comes back. So that is something to definitely look out for and could signify the end of a trend. Another thing to look out for is support and resistance levels on a higher time frame. So I like to set up my charts like this, and I have the daily on the left, upper left here. I have the hourly, the 6 minute in the lower right, and the lower left is the weekly. So I can see all of the time frames put together, and I can see if price is hitting a support or resistance level on a higher time frame. And by the way, if you like the charts that I'm using TradingView. So if you want the link, it's in the description below. That's my affiliate link. But I love using TradingView, and I only recommend products that I really like. If you want to see my review on TradingView, click on the link in the upper right corner right now, and that will take you to the video. So for example, on the Euro US dollar, the daily chart is hitting resistance right now. So I can zoom into that, and it's a pretty solid resistance level, and price is currently bouncing off of it. So once I know that that's a resistance level on a higher time frame, I might be trading the 1 hour chart, and I can just take a look at how that 1 hour chart compares to where price is on the daily chart. Now, support and resistance alone is not going to determine the end of a trend. However, it can be a good clue, and I'll give you a couple more tips later on things you can look for at these levels. But knowing where these levels are is the first step. A slowing of momentum is something you can look for towards the end of a trend. So for example, with this CAD Swiss pair on the 4 hour chart, we can see that price is really strong in the beginning of the trend, retraces quite a bit, really strong again, retraces a little bit, pushes hard, and then it starts to go sideways a little bit, drops, and then as you can see, this last push is not as strong as this first push or the second push or even this third push, right? So momentum slowing here, momentum slowing here, and then you see price start to drop off. So this can be a good indicator that the trend is coming to an end. One method for identifying the end of a trend is not talked about too much, but it can help a lot, and it can give you some insight into what traders are doing, especially professional traders. What I'm talking about here is trader sentiment. So my friend Walter has a page like this, and he looks at the market positions of people in the Forex market. So this is measuring the retail traders. So if the retail traders or the traders who usually lose are on one side of the market, he's going to try and get on the other side of the market. So for example, with the pound New Zealand, most of the retail traders are short, so 73% short. So he might look for a good place to get long on the chart. However, if we scroll down, if we look at something like the Aussie Singapore dollar, 75% of retail traders are long. So he's going to look for an opportunity to go short. Now in the futures market, you could use something like the Commitment of Traders report, which reports large traders versus small traders. And that can also be an indicator of which way the professional traders are going. The next thing to look for is a price action chart pattern that will give you a clue that the price could reverse and the trend could be at an end. For example, let's take a look at the Euro US dollar. You have a nice trend here. Price hits this level 1, 2, actually 3 times, and then you have an engulfing candle on this side, which is a strong indicator that price could reverse. And indeed, price does come back down to the original level. Another pattern to keep an eye out for is the head and shoulders. So this is kind of an odd looking head and shoulders, but it's still a head and shoulders. So you have the left shoulder here, you have the head, which is the highest point on this pattern, and then you have the right shoulder. And what's going on here is price tried to press through, it tried to really press through, and then it's failing now. So it's creating a lower high. And as you can see, price dropped after that. Now, these price patterns that I'm explaining to you are really good when they're combined with support and resistance levels. So be sure to check out your support and resistance levels also when you're looking for these patterns. Okay, this is a really good example also because there are several places to get in on this trade. So if you're really aggressive, you'd get in on the right shoulder here with this big candle because that's a pretty good indication that it might fall. Otherwise, you could look for a break of the neckline here, a close below the neckline, which is the traditional entry on a head and shoulders. Or you could play the retest here, which is a little safer because you can set the stop tighter and you have a kind of a confirmation that this level will hold. Another pattern that you can look for that could be technically a double top, but I call it a Batman because it looks like the top of Batman's head where you got one ear here and one ear here. The difference between this and a double top or a double bottom is that there's a consolidation period in the middle. And that's generally a good sign that things will start to turn around if you see this price move down from the right ear. So if you want to learn more about this, I have a blog post about it on tradingheroes.com. Just check that out. And the final pattern I would recommend you look for and test is this rounded bottom or rounded top. And keep in mind that any of these patterns can be used as tops or bottoms. So if I just mention one of the entries, then it applies for the opposite one also. So what you're looking for in this case is kind of a rounded structure like this. This also has a good false breakout on it. So generally if it's going to be rounded or there's kind of a range and then you'll see a false break where the stops get taken out here and then it continues in the opposite direction. So keep an eye out for that. So those are some price action patterns that you can use to potentially tell if a trend is going to reverse. And again, these are more reliable if they coincide with a support and resistance level. And always remember to backtest this stuff so that you know what kind of advantage you have with these patterns. Another way that you can potentially spot the end of a trend and lock in more profits is to use an indicator. So you could use something like a moving average or the parabolic SAR. These are popular methods for capturing trends, and I'll show you how it works here. So in this example, I have a long exponential moving average and I have a short exponential moving average. The short one is the 20. So what you could do is you could stay in the trade until price closes on the other side of the moving average. So for example, if we got in around here somewhere, you might exit here and then maybe you'll enter again here. And then that would have been great because you would have caught this entire move and then you would have exited at around this level right there. And you would have caught most of that move. Otherwise, some other traders might just target this support level here or maybe another support level down here, and they wouldn't have been able to catch all of this move. So that's one way you can do it. Another popular one is the parabolic SAR, which I have on the chart here. That's these dots. And the way some traders use it is that they will trail their stop loss according to the parabolic SAR. So let's say that you trail your stop loss maybe 2 dots back. So price is coming down here, and then your stop loss will move down with each dot, but you go 2 dots back. So in this case, it's 1, 2, the stop loss would be up here. And you probably wouldn't have gotten stopped out there. But then price continued down, 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 and then your stop loss would have been right there, and you would have gotten stopped out at a similar place with the moving average. So either one you used in this example would have worked very similarly, and they would have allowed you to ride the trend and capture as much profit as possible. This one isn't quite an indicator, but you can also use trend lines. Now, I'm not a big fan of trend lines, but some traders like it. The only reason I don't like it is because it's a little bit subjective sometimes, but if you draw them consistently, they can help you. So in this example, we have a nice double top formation here where price rejects this level twice with a couple of really strong candles to the downside. So when price breaks this trend line, you could enter on the close below the trend line. So that would be this candle right here. And as you can see, you could have made a pretty nice profit when it came down. Now, I'm not a huge fan of this one, but it can help. I'm talking about the Elliott Wave. Elliott Wave theory basically says that there are going to be 5 waves in any trend. So for example, we'll take the Euro US dollar. This would be wave 1, wave 2, wave 3, wave 4, long wave 4, and then wave 5. And at that point, at point 5 is where the trend usually ends. And then after that, Elliott wave theory says that they're going to be a series of retracement waves. There are times when it's hard to tell when you're in a wave 3 or a wave 4 or wave 5. So Elliott wave is just a good ballpark method of looking at a trend. So there are two big mistakes that I feel people make with Elliott wave. Number one, they try to analyze every single move through Elliott wave theory. And in my experience, it doesn't work like that. Elliott wave theory only really helps if you have a strong trend. Number two, I personally believe that too many traders put too much weight on Elliott wave analysis. I think it's a good rule of thumb and it's a good guideline to see when the trend could be ending, but I don't think that it's a very good primary analysis technique. Now, I'm sure that there are some people who are really good at Elliott wave, but for me, I have never seen it work reliably enough to trade off of. Let's take a look at a couple more examples. This is Bitcoin. So this is wave 1, wave 2, wave 3, wave 4. And then this is where it gets a little muddy, right? Like, is this the wave 5 or is this the wave 5? By definition, I think this should be the wave 5. But if you were here and then you called that the wave 5 and then it came back up again, then you might be disappointed depending on how you exited. But luckily, you didn't lose too much there. But this is an example of where you could use Elliott wave to kind of guess where the end of the trend could be, because the moves are very defined, right? 1, 2, 3, 4, and then 5 is kind of a gray area. But at least you know that somewhere in this move is where the trend could come to an end, but it's not exact. All right, one last example on Elliott wave. This is a really choppy chart, a lot of gaps, but this is Barrick Gold. And as you can see, Elliott wave can be a good guideline to show when the trend might end, even on a chart like this. So let's take a look at this move going down. We're going to look for wave 1. This is probably wave 2, wave 3, wave 4, and then this is the 5th wave, right? And then it starts to retrace, and it looks like it's forming a base and might start to head back up. So if you like these ideas, you have to take some action. You have to put together a trading plan, backtest that plan, and then tweak it to see what works best for you and the market you trade. If you found this video useful, hit the subscribe button and the bell to get future updates on more videos like this, and thanks for watching.